What's up everyone, it's Scotty with MoneyVest. So today we're going to be analyzing Broadcom, ticker symbol AVGO, and this is a stock that of course fast approaching close to $1 trillion in market cap. And I'm also going to be using our very own MoneyVest platform to analyze this company. This is quite literally the beginning right now because there's going to be a lot of really interesting features and tools and functionality that we're going to be adding over time. So I'm super excited for that, and hopefully nothing breaks down because we're still doing a data load and we're still kind of bringing in over 17,000 stocks here on the platform, and there's a lot of bugs right now that I'm working on. So there's a lot of things that I'm sending over to my developers that, guys, this doesn't work, fix it. So over the next couple of weeks, I'm just going to be testing the website. I'm going to be using it on here on our platform and on our YouTube channel, and I hope there's no embarrassing moments because there will be bugs. The website does sort of break down, a couple times here and there because of a lot of data that's being calculated on the back end. So again, I really am excited for this launch. We're going to be doing that on July 8th if everything goes smoothly and there are no further delays. So if you want to get access to this, link's going to be down below. We'd love to have you on board, and right now we're offering a 51% discount as a special pricing. So you're going to be locked in at this rate forever, and all the additional features and tools, whatever we're going to be bringing online, you will not have to worry about it. And trust me, there's going to be macro dashboard, there's going to be S&P 500's fundamental, technical positioning, institutional involvement, transactions and ownership data, hedge fund portfolios, a lot of really, really cool stuff we're going to be adding over time. So link's going to be down below if you want to, of course, take advantage of that. So today we're going to be analyzing Broadcom, as I mentioned earlier. So if you take a look at the market cap, of course, we're sitting at almost $900 billion in terms of that market cap. So very, very strong numbers. And the cool thing about this platform is that we've got a very nice key stats table, right? So key statistics essentially going to show you a nice snapshot of the entire company in terms of margins. We've got valuation, we've got efficiency, we've got financial health, and we've also got growth for compounded annual growth rates on a fiscal year basis. And we got some basic stats related to, of course, the year-to-date gain. We've got the stock beta, we've got the enterprise value, got the revenue on a trailing 12-month basis, we got employees, and of course the market cap as well. So stocks beta, of course, 2.28, suggesting the stock is a lot more volatile than the S&P 500. And a year-to-date gain of just under 64%. But really, my focus is on a few different things. Number one, if you take a look at the revenue growth for Broadcom over the last 3, 5, and 10 years, right? So I've broken it down into 3 years, 5 years, and of course 10 years. We're looking at some pretty decent growth, right? So 10-year basis, 30%. 5 years, 11%, and 3 year is over 14%. But the more important piece here is the diluted earnings per share. So bottom line EPS is actually growing at a much faster rate, 73% growth on a 3-year basis for earnings per share, 31% on a 10-year basis, 5-year not so much, but really the last 3 years is really the growth come in for Broadcom, and free cash flows over the last 10 years have grown at over 43%, and of course a 3-year basis just a little bit under 15% for the company. If you come over to the valuation, we are obviously trading at a much higher valuation on a trailing 12-month basis, so 85 times earnings, over 20 times sales right now, 47.5 times free cash flow, 46 times operating cash flow. So very, very high numbers when it comes to the overall valuation for the business. And when it comes to the financial health, current ratio 1.25, quick ratio 1.16. Net debt is positive, suggesting for the company having more debt than cash on the balance sheet. So obviously not great, but debt to free cash flow is still pretty strong at over 4 for the business, which again suggesting for a pretty solid number here in terms of the financial health. Now moving over to this right here. So let's just quickly go over to, I'm going to delete everything here. We're going to move over to MoneyVest metrics, and this is something that we have built on our own. And what I've done is that I've essentially categorized 5 different things for every single company. And we look at the company in terms of growth again, and of course we got profitability. We've also got things like, let me just remove this. So we got growth, we got profitability, we got efficiency, financial health, and valuation. And we've also got our own check marks as well as our M score. M score essentially is going to tell us how good or bad that stock is. We're assigning a numerical value to that company. So for example, Broadcom's M score right now, as you can see, is a 3.55 out of 5. That's actually very good. And across the board on the growth section, you'll notice that it actually scores pretty well. And that's going to be anywhere between 4 and 5 out of 5 here with a very, very nice growth rates, for the company as well. But again, this is based on a 3-year basis. If you come over here, drop down, you can select 5 or 7 or 10 years. If you go to 7 years, you'll notice that, again, the company is growing really well. And essentially, revenues have gone from $17.6 billion to now 2023, just over $35 billion. So they've more than doubled in that time period. Gross profit's gone from $8.5 to $24 billion. That's again 3x increase. And net income's gone from just over $1.6 billion to $14 billion for the company as well. The reason why it doesn't have a CAGR here and says stable is because the CAGR is actually calculated based on 7 years. So even though we are displaying 7 years worth of data, so 2017 all the way through 2023, that's going to be about 1, 2, 3, 4, 5, 6, 7. So we're displaying 7 years worth of data. But in order for us to calculate the CAGR for 7 years, we're essentially doing 2023 minus 7, which actually comes out to 2016. So that's why 2016 data is not listed here, because again, we're displaying 7 years worth of data. But when we're calculating the CAGR, it's essentially showing us 7 years worth of CAGR. And that's why it's not showing us anything right now, because I'm assuming 2016 Broadcom's net income was not positive. So in other words, if I go back, if I select the drop down, let's just go over to 10 years, we're looking at 10 years, 6 years worth of data. So 2016, the net income is indeed negative, what you can see over here, which was $1.7 billion for the company. So that's why the CAGR is not able to calculate. But 10-year, so if you look at the 10-year CAGR for net income, 38.25%. So very, very high growth across the board for all these metrics. 30%, 35%, 40%, and 35%, then 39%, 38%. Shares outstanding have also increased by 5.4%. But again, more recently though, if you come over to the companies, let's say 5 years worth of data, it's been a lot more stable at around negative 0.19%. So in other words, the share buyback has been pretty decent for the company. When it comes to profitability, and this is the quite interesting part about Broadcom, is the shares outstanding, of course, have gone down and margins have increased for the company. So in other words, gross margins have gone from 55% to well over 68, almost 69%. So that has been a rapid expansion. So across the board, margins have increased for Broadcom, anywhere from expansion to rapid expansion. As per our MoneyVest metrics here, operating margins have gone from 18.5% to over 43%, and now 46%. Net margins from just under 12% to 39%. This is actually quite insane how well the company has grown. Not only revenues, not only earnings, but the margins have also expanded as well. EBITDA margins from 44 to 56%, operating cash flow and free cash flow margins from 40s to now sitting almost at 50% in terms of those numbers. So very, very strong numbers here coming in for Broadcom here. Now, when it comes to efficiency, we've got, somewhat efficient to highly efficient to somewhat stable numbers here. Return on assets, equity, return on invested capital. I'm not going to spend too much time on this because if I go over every single data point, it's probably going to take us forever. But that's the whole idea, right? You can pretty much do the analysis yourself. Look at our MoneyVest metrics. You can have an M score. You can have a specific check mark. Now, if you come over to the valuation tab, of course, it's going to be trading at a little bit of a premium to somewhat expensive valuation, because what we're doing here is we're really looking at the average multiples for Broadcom over the last whatever years we're looking at. So in this case, we're looking at 5 years. So for example, in the last 5 years, the average price earnings multiple that it's traded at 37. Right now, as of 2023, 37. Trailing 12 months, it's well over 85. Forward basis is actually a little bit lower. I'll go over the analyst estimates in just a minute. Earnings yield right now at 2.69, which obviously is a lot lower than the average number of 4.22. That's why it shows that it's actually trading at a bit of a premium valuation relative to its own historical average. When it comes to price to sales, we're looking at about 14.5. And again, this is based on 2023 numbers. Trailing 12 months, we're closer to 20, which obviously is a lot higher than its average of 8.27. Price to free cash flow average about 17.6. Right now at 30. Trailing 12 months, much higher. So very, very expensive in terms of the valuation. That's exactly what this also says over here. If you want a much bigger sort of analysis here in terms of the valuation, what I like to do is I actually like to come over to the ratios tab. So this right here is actually going to be the ratios over here. And that will give you a little bit of a better idea in terms of its trailing 12-month valuation. So over here, again, if you scroll in, you'll notice trailing 12 months and forward, 35 on a forward basis, 85 on a trailing basis. Of course, its average is a little bit higher on a trailing basis, 5-year average, and forward it's 25 right now, 35. So significantly higher compared to its own average, 5-year average based on a forward price earnings multiple. Price to sales, as we discussed, 20. Then we got price to cash flow at a little bit over 47. Then we got price to operating cash flow at around 46. So these are, again, some very, very expensive multiples for Broadcom. So it's a company that's actually growing its revenue, growing its margins, expansion margin, efficiency-wise also very strong, but the valuation is a little bit of an issue. Now, if you come over to 7 years worth of numbers here, so total revenue, very nice consistent growth. You can also visually see how the company is doing. So gross profit, let's just plug in operating profit and then net income as well. And this right here is the overall increase in Broadcom's revenue, gross profit, operating income, and net income as well. And let's just say that I also want to look at total assets, total liabilities, and cash and debt. So I can come over to balance sheet and I can plug in total cash over here. You can see they're sitting on well over $14 billion as of 2023. And then let's just plug in total current liabilities, or let's just do long-term debt for the company as well, which is now sitting at well over $37.6 billion. And if I want to look at this on a quarterly basis, I can also come over here and select quarterly. And let's just go back to the last 8 quarters for the company, and once again we can plug in total cash. You can see the cash has been coming down a little bit, so from 14 billion it's come down to 9.8 as of the most recent quarter, and then plug in total debt as well, which has obviously increased substantially to a whopping 73, close to $71.5 billion. That's exactly why the net debt number has ballooned so much over the last couple of quarters here, as I showed you guys earlier. So again, there's a lot of really cool things that you can do. I can also plug in, let's just say, free cash flow over here. Free cash flow a little bit over 4.4 to $4.5 billion for the company as well. So if you come over to analyst estimates now, so this is going to be what are the analysts saying about the price or the analyst estimates for revenue and EPS for this particular company. Right now, of course, we got a strong buy rating on Broadcom. And when it comes to annual EPS expectations, expected to be about $100 a share by 2028. So 2023, the actual number was just under $33, and the expected 2028 number is just over $100 on average, with a high estimate of $103 and a low estimate of $96 per share. Also, the interesting thing here is that I've also included for year-over-year growth and CAGR formulas. So year-over-year growth basically shows what is going to be that year-over-year growth here for earnings per share, and CAGR essentially showing us what's going to be that compounded annual growth rate. So this right here is going to be that 5-year growth rate. This is going to be for 4 years. This is going to be for 3 years. It's going to be for a 2-year CAGR and a 1-year CAGR. So depending on how far out you're analyzing for that company, because I'm going to be analyzing for the next 5 years, I can use this number right here, 24.88%, because that is exactly the analyst estimates here based on consensus expectations of about 3 analysts. Again, not a lot, but the longer you go out, the farther you go out, less analysts are going to be forecasting that far out for any company. And of course, price to earnings multiple comes down from a forward multiple of 37.96 down to 18.26, based on those higher earnings of just over $100 a share, which again, they have gone up because for a lot of semiconductor companies, a lot of analyst expectations have gone up tremendously over the years, especially over the last couple years after the introduction of artificial intelligence. So what we're going to do is we're going to come back, and remember this number, 24.88%. So we're going to come back over to Analyzer, and we're going to come over to our discounted earnings multiple model, something that we have used on our spreadsheets. I'm going to hit autofill. So this is going to populate the last year's worth of net income of over $14 billion. We're analyzing for 5 years. So what this CAGR essentially shows us automatically. So by the way, if I change this to 7 years, you'll notice the numbers are also changing over here. Let's just go to 10 years. You can see the numbers are changing for this. So what this is actually doing is it's giving us the last 5 years of historical CAGR for net income, which is 2.81%. Really, really low. But last 3 years, as I mentioned, has been much higher, 74% for the company. So it's been much stronger in terms of net income. So if I come over to 5 years and if I plug in the 25%, which is based on analyst expectations for the next 5 years, again, you can plug in your own numbers, and then expected P multiple last 5 years on average 37. But I do believe that 37 is a little too high for the growth rate of 25. Excuse me, so let's just go in with the 25 as the P multiple. So let's just plug in 25. 12% discount rate is fine. 10% margin of safety, and then negative dilution. So 0.19% over the last 5 years has been the share buyback. I'm going to go with, let's say, 0.5% just to be a little bit more optimistic that the company is going to be doing more share buybacks. And then if we hit calculate, we're going to be getting a fair value or an intrinsic value of just about $1,200 $213 per share. That's going to be about $121 on a post-split basis, because Broadcom has also announced for a 10-for-1 stock split, which is going to happen, I believe, in July. But this is going to be that sensitivity grade, and what you can see over here is essentially a fair price or an intrinsic value about $1,213 based on a 25 times P multiple and a 25% growth rate, so 25-25. And again, if you go higher up on the price earnings multiple and higher up on the growth rate, this is how your fair value or your intrinsic value would change based on your expectations. So it can be well over $2,000 if you believe that Broadcom is going to be growing, at a 31 to 35% interest rate, and then of course a 33 to 35 times P multiple. Now we're sitting at well over $2,000 a share. But of course, it's going to be a lot lower if you believe that you're going to have a lower P multiple with somewhat lower growth rate for Broadcom as well. So this is where I think the intrinsic value should be, or fair value should be, for Broadcom. There's no doubt it's a fantastic business. It's an amazing company that's done really well, and it's grown, of course, very, very well. So if you come over to fundamental analysis again, and if you simply go over to the annual numbers, let's just go over to annual. We're going to go over the last 3 years. And let's just come down to net income here. It's done incredibly well, you can see though. So you can really just see that over the last 5 years and how it's just absolutely gone parabolic in terms of net income, from about $6 billion to now well over $14 billion for the company. So hope you all enjoyed this video and a complete update on Broadcom for the first time using our very own platform. Let me know your thoughts down in the comment section below, and what do you think? As always, make sure that you drop a like, and if you want access to this early access, which is going to be launching on July 8th, there's going to be a lot of new features and functionality that we're going to be adding over time. Link's going to be down below if you are interested in joining us. As always, happy investing. I'll see you all in the next video.